Okay, so please look at your note 31. So what happened? Remember, we use perpetual, right? So perpetual 永续盘全字 hard worker. We record two things. First is for your revenues. So customer didn't pay the cash yet. That's right. We have accounts receivables and we earn the revenue $6,000. We are hard worker, so don't forget. We record expenses as well. So second thing is our cost of goods sold expenses increase. At the same time, inventory decrease. Okay, that's from your chapter 5. And because of some reasons, you decide to sell your receivables, right? First reason, you don't want to do a dirty job. So this case could be the first reason. Oh, I don't want to do the dirty job, so I decide to sell my receivables to the bank. Okay, so for your receivables, right here, accounts receivable $6,000. I don't want to do a dirty job, so I decide I sell it to the bank. Okay, so for that $6,000, you sell it to the bank. Okay, so when you sell to the bank, you got the cash. Only 98% because we tell you it's 2% commission. So you got the cash only 98%. Cash increase only 98%. Why? Because you had to pay the commission, right? Nothing for free. So your commission, how much? 2%. So you have to pay expenses, commission 2%. Okay? Then totally you don't have receivables anymore because you sell it to the bank. Any questions? No problem? Okay, so let's look at another case. Still, we talk about sell the receivables. Okay, so another case we want to talk about is on your slide, page 99. Do you have a credit card? Do you have a credit card? Child, you have a credit card. Oh, okay. So when you have a credit card, what does it mean? And use the credit card to buy something today, then you didn't pay the money, right? So when you have a credit card, like a child, okay, this is child on your slide, page 100. Oh, child. This is you from my heart. Okay, child decided to go to shopping mall to buy something using credit card. Okay, so when you using credit card to buy something in shopping mall, did you pay the money? No, right? So when you will pay the money? After 1 month, when you get the bill from credit card company. Okay, so when you go to shopping mall to buy something, you didn't pay the money. Okay, later on, after 1 month, you got the bill from credit card company. You pay the money to shopping mall or you pay the money to credit card company? Credit card company. So why you didn't pay the money to the shopping mall? You buy something from shopping mall, then why you pay the money to credit card company, not shopping mall? Okay, so what does it mean? Means when you use credit card to buy something in shopping mall, at the same time, shopping mall sell receivables to the credit card company at the same time. Hi, Ann. Okay, so you should understand when you use the credit card, you didn't pay the money. So on this day, shopping mall have accounts receivable, for example, $100 from you. But on the same day, shopping mall sold the receivables to the credit card company. Okay, so credit card means sale of accounts receivables. Okay, so after 1 month, the credit card company will ask the customer, hey, you should pay the money back. Okay, so it's the same situation. Any questions? So for your company, if you are the shopping mall, for your company, today you've done 2 things. So what are these 2 things you've done? First, you sell the product to customers. Second, you sell receivables to credit card company. Okay? So for your company, you've done 2 things. First, sold products. Sell products to customers. Second, you sold accounts receivables to credit card company. Okay? So when you sell the products to customers, since customers use credit card, so you have receivables. At the same time, you sell the receivables to credit card company. And don't forget, nothing for free. So you have to pay the commission to credit card company. Okay, any questions? No problem? Then let's look at the case. Okay. So on your slide, page 103, here told you what happened. Customers buy something, then using her Visa First Bank card. So means the customer use credit card. Okay, when customer use the credit card means customer didn't pay the money today, right? Okay, then for your company means what? You sold receivables to credit card company. Okay, since you sell receivables to credit card company, nothing for free, right? So service charge, commission 3%. So this is commission to credit card company. Okay, and don't forget, you've done 2 things, right? First is what? Sell products to customers. When we sell inventory products to customers, you should understand which method you use. Here told you periodic 定期盘存制. So you just need to record 1 thing, right? So why here we tell you periodic? Because this is when we talk about sold inventory to customers. You should understand which method you use. Okay, so sell inventory to customers. We use periodic because we are lazy guy. Then second thing, when we sell accounts receivables to credit card company, then you should understand what's your commission. Okay? So based on these two things, actually you could recall it separately, no problem. So what if we recall it separately? For first thing, what should we use for your journal entry? Debit, accounts receivables, credit, service, sales revenue. How much? $6,000. Okay, so that's for our first thing. How about your second thing? Sell your receivables to credit card company, right? So when we sell receivables to credit card company, debit what? Credit what? Debit cash, right? How much you got? 97%, right? So 97% how much? 5,828. 5,820. And we pay the commission, service charge, expense. 180. And since we sell the receivables to credit card company already, so we don't have the receivables anymore. $6,000. Okay, so that's for your first thing. Sell the inventory to customers. That's for your second thing. You sell receivables to credit card company, right? So based on this, you could write down it separately if it's easier for you to understand. But since they happen on the same day, we don't want to record two things. We have so many journal entries have to write down. So we will combine together. How to combine together? Did you find out accounts receivable, debit, credit could be cancel each other, right? So for your accounts receivables, we will cancel each other. So based on this, what's the end? Debit what? Cash service charge. Credit what? Service revenue. Okay? Any questions? So we will combine together, become one. Debit, cash, service charge. Credit, service revenue. You don't need to because you sold it to credit card company already, so it's not yours anymore. Okay? No problem? Okay. If you don't have any questions, please go to your notes on page 32. Finish page 32. We talk about credit card. When customer use credit card. So on your note, page 32. But be careful, page 32. When you are a hard worker, so we use perpetual 永续盘存制. We didn't use periodic 定期盘存制. Okay? Sell the products to customers. Then you should understand you are a hard worker or lazy guy. Okay? When we sell the product to customer, lazy guy, periodic, you just need to record revenue. But on your note, page 32, you are a hard worker. You use perpetual 永续盘存制. So you should record two things, revenue and cost of goods sold. Okay? So page 32 here, you are perpetual 永续盘存制 right? Here we told you perpetual 永续盘存制. So don't forget, you had to record two things. First is what? Revenue. Second is what? Expenses, cost of goods sold. But for your revenue, be careful, because at the same time, we sold receivables to credit card company. So we use one journal entry to combine two things, okay? In case you forgot, you can look at the slide on page 103. Okay, combine two things together. If you finish, you can double check it. First about revenue, second about cost of goods sold. And about revenues, we sell accounts receivables at the same time because customer use credit card. So you will find out that actually this part is our accounts receivables, right? But we sell it to credit card company already. That's right. We don't have accounts receivables. We described we sold to credit card companies already. Okay, any questions? No problem? Then we've done the third issue already. Sell receivables, okay, to the bank or to the credit card company. No problem? Okay. So since we've done accounts receivables, right now we will go to our notes receivables. If you understand accounts receivables, then totally the same for your notes receivables, okay? The only difference is you have two extra things you have to consider. Notes, what's the first extra things? Notes, you have to consider interest. Don't forget. Okay, so we talk about that. Please go to your slide on page 105. So since we've done accounts receivables, right now we want to tell you notes receivables, 应收票据. So what's the difference? Oral plus promise or written promise, right? So since we have a written promise, we have the note, okay? So means what? We write down all the promise on our note. Okay, so for this, what kind of promise we have? First, $1,000. What does it mean? $1,000 is the principal, 本金. Promise you pay the money back, $1,000 to you in the future. Okay, so $1,000 means what? The amount promised to pay back in the future. So it's principal, 本金. So this is the first promise. So first promise. Promise you I'll pay back $1,000 to you in the future. You should understand promise. What does it mean, promise? Promise talk about the future, right? Not today. I promise you, Jason, I promise you, I'll let you pass the course. So that's about future, right? Not today. But actually, I cannot promise you. Just want to tell you, this for future, not today. So first promise, will pay $1,000 back in the future. What's the second promise? When you are going to pay the money back? After 2 months. So this is your maturity date, 到期日. Maturity date, 到期日. Okay, so there's a second promise. What's the third promise? Always, you cannot forget it. What's that? Interest. Note, always, nothing for free. So we have interest, 12%. So this is your third promise, interest rate. Annual interest rate. Nian利率. So this is our third promise. Okay. Then also you should tell them which date you made the promise. So which day we made the promise? May 1st, 2025 is the date. Write down the note. You made the promise on this date. So this is the date. Write down the note. Okay? It's quite important. You should understand. At least, we have 3 promises. So what are these 3 promises? First promise, principal. When? Pay the money. What's the amount you are going to pay back in the future? Second promise, maturity date. When? Third promise is interest. Okay, so there's 3 basic promises always we have. Next question, could you tell me who write down the note? The guy borrow the money or the guy lend the money? Who write down the note? creditor or debtor. The person borrow money from the bank, or the bank lend the money to the company. Who write down the note? Huh? Who made the promises? If borrower, yeah, child. Hi, child. I need the money. Could you lend me the money? I want to borrow money from you. Then you say yes. Okay. Then I say, oh, I promise you, I'll pay the money 1,000 to you after 1 week. After I told the promises to you, you don't trust me. You say, write down the note. You write the note, or me write down the note. Of course, me, right? Not child. So who write down the note? Who made the promises? You should write down the note. Okay? So, did you find out? Here I told you, maker. Maker means the company, the person, the guy made the promises. So who? The debtor, the borrower. Okay? So of course not the bank. So you should sign the name to tell them, okay, this is my promises. I'll keep my promises. So who write down the note? Who signed the name? The debtor, the borrower.债务人。Since you signed the name, means what? That's your promises. So don't forget to keep your promises. Okay? So who got the note right now? Who has the note on hand right now? Debtor or creditor? The bank or the borrower? I'm the debtor. I am the borrower. So I made the promise. I write down the note. Then I give the note to child. Or I keep the note. Of course, to child. In the future, if I don't want to keep the promise, I keep the note. I throw it away. So of course, child keep the note. In the future, if I cannot keep the promise, child will take a note, go to the court, right, to sue me, or find the police, right? So of course, who keep the note? Bank, creditor. Okay? So for the maker, usually who made the promises? The debtor, the borrower. So for the note, for them, they are their liability, notes payable, because they owe the money to the bank. Okay? So maker, they have a note payable for whom? Debtor. 债务人。Who keep the note? Creditor. So they have notes receivable. Keep the note. Also, the bank had the right to get the money back in the future, right? So it's creditor, 债权人。Okay, any questions? No problem? Okay. So since you understand, so on your slide, page 107 is the terms we mentioned already. So first amount is the principal. 本金 is there $1,000, right? So $1,000 principal, what does it mean? The money debtor, borrower promise to pay back in the future, right? So you should understand, is the money they borrow today? Principal, 本金 $1,000 is debtor's promise to pay in the future, right? Is the amount they borrow today? They borrow 1,000, they pay back 1,000? It's not. So it's not. So $1,000 they promise to pay back in the future is not the amount they borrow today. It's not. In chapter 11, you will understand why it's not. So chapter 11 will tell you why it's not. Okay, so principal means the amount they promise to pay back in the future. So is not the amount borrowed today. Okay? Why is not? Because today's $1 is not the same as future's $1. Okay? So you should understand the time is very important. So don't waste your time. Time is very important. Even though $1 today is not $1 in the future. So it's not totally not the same. Okay? So the money you borrow today is not the money in the future. It's not. So your promise about future, your promise is not about today. Okay? So issue date is the day we write down the note. Maturity date, no problem, right? Which day you should pay the money back. Okay, next slide. Page 108. For interest, remember, usually when we didn't mention how long, it's for 1 year. So it's quite common. We used to use that way to express interest. When we didn't mention how long, it means 1 year. Okay. So when we didn't mention how long, and you find out 12%, that's for 1 year. Okay. So annual interest rate, usually we use this way for 1 year. Also, here I want to tell you, interest rate on our note, we call it contractual interest rate 票面利率 contractual interest rate 票面利率 Okay, so means what? The interest rate you could find out on the note. Because in the future, chapter 11, we will tell you interest rate. We have two kind of interest rate. So right now, we mention contractual interest rate. So on your note, here when we tell you 12%, okay, this 12%, we didn't tell you how long. Then it means annual. Also, you could find out the interest rate on the note, then is contractual. (票面利率) Okay? 1年的票面利率12%。What if we tell you how long? Okay? So if on the note, we tell you is 2% each month. Okay, so means what? 2% is for 1 month. Also, 2% on your note, so it's contractual. Okay, so 2% is 1个月的票面利率。So far, we just mentioned contractual interest rate 票面利率 but after 2 months, after 2 chapters, on chapter 11, we will tell you another interest rate. What's that? Let you guess. Market interest rate. Okay, so that's for chapter 11. Any questions? So you should figure out the difference. Contractual interest rate 票面利率 is the interest rate on the note. Also, contractual interest rate is what? The promise. Okay, debtor borrower's promise. It's totally different from market interest rate. We will mention it in the future. Okay. Okay, so about the note, usually the major reason is because of landlord borrow money. Okay, so the major reason is you go to the bank to borrow money from the bank. They don't trust you, so you have to write down your written promise. Okay, usually that's a major reason, but we still have some reason you have to write down the note. So what kind of reason? Still, maybe for customers, they have to write down the note when you think the risk is really too high. So when the risk is really too high, even though for customers, we will ask them to pay the money back, okay, within 1 or 2, 3 months, right? But maybe one customer tell you, okay, could you give me the longer time to pay the money? I need 6 months. So the time is exceed the normal limit. Okay, so you think the time is too long, so the risk is too high. So you ask customer to write down the promise. Okay, so for the time or for the amount, usually, okay, customer, you give them oral promise. You accept oral promise, accounts receivable, but the amount for the transaction maybe $1 million. But someday, big customer told you, hey, I have big business for you guys. It's not 1 million, it's $10 million. So the amount is too high. $10 million. You think, oh, okay, could you write down your promise? Okay. So for this kind of situation, you will ask the customer write down the written promise. Okay. So when the amount is too high, the amount is too big. Okay. Credit term, the time to pay the money back is too long. Okay. So because of this, you will ask customer to write down the written promise. Okay. So when the risk from customer is too high, so the risk from customer is too high. So you need the more promise. Okay. So for first reason, for second reason, it's still okay. When customer risk is too high, but still there's a big business, of course, you want to make the money, make the revenue. So okay, just need written promise. Last situation is the best situation for your company. So what happened? in settlement of accounts receivable. So the last one is the worst case for your company. When accounts receivables, customer should pay the money back today, but they cannot. So what if today customer should pay you money? They cannot. You call customer, hey, you should pay the money. Customer say, could you give me more time? Then what could you say? The only way you can say is accept it, right? Otherwise, what could you do? So you say, okay, I give you more time. Could you pay the money as soon as possible? Customer say, okay, I promise I really will pay the money back. But you don't trust them. What could you say? Could you give me the promise? More guarantee? Write down the note. Okay. So the last one is the worst case is when customer cannot pay the money back today. They ask you to give them more time and give you written promise. Okay, so for first reason, second reason is okay, it's normal situation. For the last one is the worst case for your company. When customer cannot pay the money today, you should be very careful. Maybe the money you cannot get back in the future. Okay, when customer have some financial problems. Okay, so maybe customer have some financial problems. Okay, any questions? So you should understand accounting is when we base on the final result to record the situation, the event. That's it. So what happened before accounting? That's more important for you guys. Okay. So accounting, we just record the final result. So the whole process, what happened, is more important for you guys. You should understand what happened. Okay. So, no problem? Okay. So since 1, 2, 3, either one, you got the note. You have a note receivables. Remember, accounting actually totally the same as accounts receivables. The only difference is you have a 2 extra job have to do. So what are these 2 extra job? First is maturity date. Second is interest. So you have to compute maturity date and interest by yourself. Okay. So for maturity date on your slide 111, on demand means what? On demand means you ask customer, you ask the borrower pay the money today, even though today is not a maturity date. So usually on demand is not a good thing. Like what? Oh, you find out the one borrower have some financial crisis or they have some financial problems. So you are so afraid you cannot get the money back. So you ask them, hey, pay the money today. Or borrower, they violate the contract, the note. So on the note, on the contract, borrower promised something, right? So they violate the promises. They broke the promises. So you will ask them, hey, pay the money back today, even though today is not the maturity date. Okay? So that's on demand. Stated date means what? on the note, you will tell them which date. So it's quite easier. On the note, you will say, hey, please pay the money back when 2025. Then April 1st. So I know which date. So there's no problem. You don't need to calculate the maturity date. Okay? So the third one is what? Steady period of time. So you tell them how long. So for example, tell them after 2 months. Okay? So after 2 months, which date? You should calculate the maturity date by yourself. Okay? So after 2 months or after 90 days. Or maybe after 90 days. Okay? So either way, you could express it like a months or like a days. And please calculate, do your math by yourself. Okay? So if it's months, then how to count the maturity date? Same date after 3 months. So what if it's 3 months? Not. Same day after 3 months. So same day after 3 months. Don't be shy. Use your fingers. Usually, some students will always count you round. Okay? Use your fingers. It's okay. So May 1st, June, July, August. Okay, 3 months on the same day. Okay? So what if, it's different months? Maybe they don't have the same days, okay? So it's okay, it's the last day. So 2 months, same date after 2 months. But when they don't have the same days, still same month, the last day, okay? So how about days? The days is skip the first day, include the last day, okay? So don't count the first day. Just count the last day. So skip the first day. But count the last day. Okay? After you got your answers, don't be shy. Use your fingers to double check again, because always I could find out some of you guys will count you wrong. Okay? Any questions? No problem? Then take a break.